Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks. I'm Kevin Hinks. I've got two paper money trades for you today on two high-profile names that we're looking at. First, Apple, and then Palantir. Two stocks possibly going in different directions right now, although the market is getting a little dicey here at 9:30 Chicago time. So let's look at Apple. Remember, Apple. Some big announcement today about investments in yesterday, with investments in the U.S. Investor shareholder meeting today by Apple, and it's had a bit of a run lately. So the paper money trade we're looking at here in Apple is a short call vertical. Now, we went out to the March 7th, so that's the end of this week and then next week. So March 7th expiration has 10 days till these options expire. And when I did, I looked at the expected move between now and March 7th, around $10. Stock's trading right around $245, down on the day now. And I sold the $255, $260 call vertical. Remember, in the March 7th expiration. I put it in at 90 cents. The stock has sold off a little bit there. It's trading closer to 60 cents now, probably 65-cent range. Remember, if you sell it for 90 cents, the risk on this trade is the difference between $5 and whatever credit you take in on that trade. If it's 90 cents, it's $410. If it's 60 cents, it's $440. There's the risk on this trade. The max you can make is whatever credit you take in, but if you look at, you're selling a short call option $10 above where Apple is trading right now. So there is and remember, only $5 off the all-time high of around 260 and some change. So a short call vertical in Apple. The risk, someone who may be leaning bearish may consider a strategy such as this. A move through to $255 towards $260 is where the risk on this trade would be. Again, the max profit is the credit taken in, whatever that is. And now Apple has sold off. Do you maybe move your strikes down? Remember, the markets are moving all over the place right now. So do you move your strikes down? Possibly, if you want to adjust the risk on that trade. So Apple, short call vertical above the market, March 7th expiration. The second one, Palantir. Now Palantir has sold off from a high of $125. It's currently trading about $86. And if you look, the 50-day moving average is right at $85.50. So just like we sold Apple and the credit is a little smaller, the short put vertical that we have for Palantir, again, going out to the March 7th expiration, 10 days, selling the $85.90 put vertical right at that 50-day moving average. Remember, Palantir sold off significantly on potential defense cuts. But this stock had run incredible amount. It's an incredible growth story, but it's something that you have to look at. So I sold a March 7th, $85.80 put vertical. I put it in at $1.60. It's trading about $1.75, $1.80 range right now. And just like the short call vertical, the risk on this trade is the width of the strikes, in this case $5 minus whatever credit you take in. If you take in $1.60, it's $340. If you take in $1.80, where it's trading closer to now, it's $320. So remember, these trades are risk defined, they collect theta, they're high probability. Now, this is a little lower probability because the stock has moved towards that 85 strike, but this is that 50-day moving average in Palantir. If buyers are going to step in, maybe it's that level. It's just a technical analysis way to look at strike selection. I don't know if it's right, but it's one way to remember the risk on the trade is always defined and always the width of the strikes minus whatever credit you take in. This is one approach traders who are looking for a rebound may explore. So two verticals today. A short call vertical in Apple, a short put vertical in Palantir. The risk on the trades, the width of the strike minus the credit taken in on both trades. That's our show for today, everyone. We'll see you tomorrow with another daily edition of Daily Trader. I'm Kevin Hinks.